The live intraday price for NUBURU Inc. stands at $0.304 per share as of May 5, 2026, showing a slight uptick of approximately 1.5% from the previous close. While most penny stock traders are busy chasing the latest speculative meme, the real story for this industrial laser specialist is buried in its pivot toward high-stakes defense contracts and a significant balance sheet restructuring that many retail investors have completely overlooked. The market narrative suggests that this is just another struggling microcap trying to keep the lights on, but the reality is far more complex. Over the last few months, we have seen a flurry of activity involving international defense alliances and a strategic shift into the counter-drone market, a sector currently valued at over $20 billion. This creates a fascinating tension between the expectation of continued dilution and the reality of a company aggressively moving toward a scalable, high-margin revenue model. When you look at the daily swings we've seen lately, it is clear that institutional activity is starting to stir, albeit from a very low base. Trading volumes have spiked on news of the Maddox defense joint venture, which is now entering a funded prototype build phase. This isn't just theory, it's a tangible demonstration for the US government. For anyone using the Robinhood mobile app or keeping an eye on their SoFi Invest dashboard, the volatility here has been intense. We are seeing a tug-of-war between short-term sellers who are weary from past reverse splits and a new group of buyers betting on the defense transformation plan. The broader context of the tech sector has been heavy lately, with Nvidia stock and Apple stock feeling the weight of macroeconomic pressures, yet small-cap names like this often trade on their own idiosyncratic catalysts. Unlike a massive individual brokerage holding that moves with the S&P 500, this ticker responds to specific billings and contract wins. Recently, the company reported roughly $660,000 in billings and a $2.5 million pipeline in its directed energy division alone. While that might sound small compared to a giant like Tesla stock, for a company with a market cap under $50 million, these are foundational blocks. If you are managing your own portfolio through a Fidelity brokerage account or using Interactive Brokers for more technical execution, you know that the going concern qualification in their annual report is the big elephant in the room. This is the common ground where skeptics gather. They see the history of losses and the $12 million public offering in February as signs of a sinking ship. However, the contrarian take is that management has cleared nearly $8.4 million in preferred liabilities and significantly boosted their cash position to over $24 million by the start of this year. They are cleaning the house while simultaneously building an extension. The recent activation of the Ukraine industrial deployment platform through the Tekne partnership is a perfect example of this. We are looking at a projected revenue range of $5.75 million to $11.5 million over the next 12 months from that single initiative. For those who do their own self-investing, this kind of specific, event-driven growth is exactly what creates the curiosity loop. Can a company that was once just a welding laser specialist really become a key player in global electronic warfare? Comment below how many shares of NUBURU you currently hold, and let me know if you think their pivot into the defense sector is a legitimate strategy or just a clever rebranding effort to attract fresh capital. Taking a step back to understand the business model, the core technology here is high-power blue laser systems. Traditional industrial lasers usually operate in the infrared spectrum, but blue light is absorbed much more efficiently by metals like copper and aluminum. This is a massive deal for battery manufacturing and e-mobility. If you're looking at the long-term potential of the EV sector, the efficiency gains from blue laser welding are substantial. It allows for faster, spatter-free production that infrared simply can't match. This technology is the backbone of their industrial side, but the reality that is now exceeding expectations is how this same high-brightness blue light is being weaponized into laser dazzlers and directed energy systems to take down drones. In the world of online investing, people often look for the next big thing in AI or biotech, but sometimes the most interesting opportunities are in these specialized industrial niches that are finding a second life in national security. The software division, Orbit, is another layer to this, providing operational resilience and AI-driven software that ties the hardware together. As they move toward 100% ownership of Orbit, the transition from a hardware manufacturer to a dual-use integrated platform becomes much clearer. Institutional ownership remains quite low, with only a handful of funds currently reporting long positions. This is typical for stocks at this price point, as many larger funds are restricted from buying shares under $5. However, if the company meets its goal of achieving positive shareholders' equity by the second quarter of 2026, that could change the math for some smaller specialized ETFs and mutual funds. Whether you use the Robinhood app for its simplicity or the Interactive Brokers platform for its deep analytics, the risk profile here is undeniably high. The recent reverse split and the 52-week low of $0.15 highlight just how much pain long-term holders have endured. Yet, the momentum in the Asia-Pacific market and a $250,000 order for a portable laser dazzler system suggests that the global sales team is finally getting some traction. When we look at the future outlook, the upcoming earnings report on May 18th will be a critical catalyst.
Investors will be looking for confirmation that the pipeline is actually converting into cash flow. The expectation is a continued loss, but the reality needs to show a narrowing gap and a clear line of sight to that 2026 revenue target of over $50 million for the Tekne acquisition alone. The risks are just as significant as the potential. Regulatory hurdles in Italy regarding the Golden Power framework could delay or block the Tekne acquisition. Furthermore, the reliance on government contracts means they are at the mercy of bureaucratic budget cycles and shifting political priorities. For those seeking investment help or using tools like Schwab Intelligent Portfolios, this stock would likely never show up on a recommended list because of its volatility and microcap status. It is a classic do-it-yourself play that requires a high tolerance for uncertainty. When you look at the chart, the recovery from the sub-20-cent levels earlier this year shows that some degree of confidence is returning. The market is starting to price in the possibility that this turnaround is real. The expectation was bankruptcy. The reality so far has been a successful capital raise and a flurry of new partnerships. This disconnect is where the alpha usually hides in the small cap space. As we wrap up this analysis, it's worth noting how the narrative of this company has shifted from a struggling industrial supplier to a specialized defense contractor. The central insight here is that the underlying blue laser technology is finally finding its most lucrative application in a world that is increasingly worried about drone threats and electronic warfare. We've seen how expectations of a total collapse were countered by an aggressive balance sheet cleanup and a pivot into a $20 billion market. Whether this momentum can be sustained depends entirely on their ability to execute on the Phase 1 manufacturing in Houston and the Ukraine deployment. The contrast between the historical struggles and the current aggressive expansion is what defines the stock right now. It is a story of a company fighting to transcend its past and prove that its tech has a place in the future of national defense. Stay sharp, watch the volume, and always remember that in this part of the market, the distance between expectation and reality is usually measured in big percentage moves. End your research here for today, but keep a close eye on the May 18th filings to see if the numbers finally match the ambition. Maintain your focus on the actual billings rather than just the press releases, as that is the only way to verify if the scaling is truly repeatable or just a temporary spike in activity. Authority in this market comes from knowing the difference between a funded prototype and a finished product. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, unshare with your friends, bell subscribe for more updates.